The O Cannabis Conference and Expo returns to Toronto June 1st through the 3rd, and there's still some good booth locations available. This exciting event is free for cannabis retailers and will feature Tommy Chong receiving a Lifetime Achievement Award at the O Cannabis Industry Awards. For more information about exhibiting or to register to attend, go to ocannabis.com. That's OCANNABIZ.com.
Welcome back to the Talking Hedge. I'm Josh Kincaid, capital markets analyst and host of your cannabis business podcast. Today's podcast is sponsored by the Great Outdoors. We're going to talk about the 5 ways quarantine has changed the cannabis industry forever, as well as look into a headset report about the effects of this quarantine on the cannabis marketplace. So stocking up is the new norm, according to Roy Bingham, that's the co-founder and CEO of BDS Analytics, finding that 57% of the cannabis consumers surveyed said that they had already stocked up or planned to do just that. Which brings us to number 1, cannabis shopping has likely been changed forever. One of the biggest changes is shifting from your traditional just walk into a store to being forced to pre-order. Some states have delivery, some don't. And so I think the ones that don't, like Washington, will be fast-tracked. But according to Jane Technologies CEO, consumers, you don't have to wait in line anymore. And as a small business, you can digitize the experience. So apparently that's the silver lining, is that when we do go back to normal, consumers will just be continuing to buy or order online to avoid the lines. A poll from Ganja God has found 67% of respondents use delivery service pre-pandemic, which rose to 84% after the start of the lockdown. Then a Brightfield Group study showed that 34% of cannabis consumers plan to switch to some form of click and collect in the future. And the number is already higher for millennials at 42%. And then online marketplace Jane Technologies reported 85,000 new registered users and 142% boost in online orders in March. Executives at Jane Technologies refer to themselves as the Amazon of cannabis and think that this is the new normal for purchasing and ordering cannabis. Number 2, diverse edibles and infused beverages are ready to go mainstream. So edibles stole the show, according to the new survey from Headset. So they also looked at an ease report that 28% bump in the category for edibles in California alone. And then BDS Analytics reporting a 70% growth in sales of ingestibles in late March in Colorado. But a lot of people don't want the old school brownies. I sure don't want just to take all of that sugar in. So people are looking for healthier alternatives, sugar-free, non-GMO, organic options. Starting to see some of the big players start to push out products like Constellation Brands partnering with Canopy Growth and having a new spiked seltzer water and other mixers coming soon. Anheuser-Busch InBev also working with Tilray for teas and sparkling THC beverages, and executives from both alliances report strong consumer responses so far. Number 3 is stating that it's no longer a niche. 420 is a landmark annual event. So companies like Weedmaps are connecting with consumers in virtual spaces. Online shopping and delivery companies in California enjoying a triple-digit growth. Ganja Gada's reported a 275% revenue increase this year alone from 2019, with the 346% jump in orders. Nationally, Jane Technologies has 1,500 dispensaries where they noticed a 68% jump in sales, reporting an $18.7 million in sales and a 95% leap from the previous Monday. Number 4 is that cannabis value brands are taking the stage. So during an economic downturn, you can see that people are going to be readjusting their priorities and their disposable income and buying less, or maybe buying more for the same amount that they were before. Either way, going to be spending a lot less. So this article says that famous faces, if backed by well-received products, can cut through the clutter. I completely disagree with that, and so does the data. So Burner's product is really popular because of the strains. So outside of cookies and outside of LA Snoop Dogg, Leaf by Snoop, those products don't sell. So Willie's Reserve just pulled out of Washington because it wasn't selling. If you look at the statistics, it doesn't matter who you are. People will not buy a product because of some, famous face. It's the genetics from cookies that makes it sell. So outside of LA, I don't think anybody cares who it is. And I definitely would disagree that famous faces are going to cut through the clutter. What you are going to see with the current financial situation is a lot of people are going to be prompted to bring in the brands with low price, introducing discounts and more modestly priced items, which are already in the works for a number of cannabis companies. But more aggressive pricing offers may be yet to come with the new reality, given that 37% of consumers surveyed by AmericanMarijuana.org fear that they won't be able to afford cannabis. I recently reviewed a pitch deck where they plan on being able to grow and manufacture cannabis at less than 50 cents per gram. Now, that's a third of what the LPs in Canada are expecting. Some of them are around $1.50 per gram. So, if a Nevada producer can make cannabis for that inexpensive, then it's just a matter of time before nationally somebody just cuts that in half, and then all of a sudden it's just that much lower. Value brands are definitely going to be center stage with Constellation and a lot of these other guys coming in and taking over the mom and pops, or even Burner coming in with phenomenal genetics. They're going to be the ones that take a lot of market share away from some of the huge companies that are starting to grow, like Constellation Brands, for example. According to BDS Analytics, people are already trading down. So they're noting that products under $20 have had a major sales in Oregon, California, and Colorado. And sources predict that the glut at the top end of the market, where lots of luxurious cannabis brands have been crowded together for the past several years, are likely to thin out in the long term in favor of mid-tier and low price point products. And I would say that consolidation has already happened, as well as regulatory risk. There were Canagars by Lyra, phenomenal. He'd put them out maybe quarterly and they would sell out by the end of the weekend. And so $99 for the small one, $420 for the large one, and they would sell out. But regulatory risk didn't allow him to put concentrate in there any longer. And so his sales kind of just diminished. The value went away. And so a lot of the products have gone away. Olala Beverage in Washington went out of business. So high end, brands and market items are becoming few and far between. It's just kind of the market cycle. Number 5, cannabis is now driving force in content and events. So April 20th wasn't just a party, it was a proving ground for original content, virtual events, and digital activations. And while the results are solid, according to industry experts, including Weedmaps, which said it drew an audience of 300,000 viewers to its high together sessions from home. Brands and dispensaries are stepping up their content game, developing it as an important linchpin of their marketing strategy and a way to speak to consumers authentically in a highly regulated ad environment. Many are launching websites, Zoom calls, Google Hangouts with their bud tenders and influencers to keep in touch with fans. Sam Boyer is a chief marketing officer and said it's definitely more engaging at a time when people are looking for information and want to hear about health and wellness. The authentic voices will really stand out. All right, we're going to take a look at this headset report on the daily updates of the virus and how it's affected the cannabis marketplace. So April is starting to bring out a new normal. So there's a trend that's deviating from Rona. And so looking at some of these trends, removing 420, because that just skews everything, we can now see that Friday saw a 6.2% decline in their share of sales. So it used to make up 18.9% and now is only making up 17.7%. Saturdays also sees 5% less of the week's sales. There was a noticeable spike on Wednesday, which was the same time that a lot of people were receiving their stimulus checks, but that trend did not persist. Going back to March, we can see that there were trends that were highly unpredictable. So with the weeks beginning March 16th through the 23rd, there was an unusual amount of customers that rushed to stores to make purchases when the stay-at-home residence orders began taking place. And later on that month, we started to see slightly more normal patterns beginning to move away from the panic buying into more normal trends. So this graph shows that what the percentage is of sales each weekday, excluding for weeks that contain holidays. You can see that sales are generally quite predictable. So normal weeks, a Friday would generally make up between 19.8 and 18.5% of the week's sales. Even weeks that contain holidays are predictable when looking at trends from previous years. So with Fridays after Thanksgiving, you see sales spike, and Christmas Day are much lower sales. What it's telling me is that people have time during the day to go out and get some items. Maybe they're on some kind of notification, text, or some other alerts via email, and they're seeing something that is getting them to go out and buy something during the day. So it's not just Fridays that they're going and buying edibles, it's the entire week. And so things are different now, obviously, working from home. So we're gonna have to take a look at some of these reports, kind of see what those new trends are. So there are some new reports from Brightfield Group and BDS Analytics and Headset. We're going to cover this week and next week. So with that, we're going to roll this one up. I'm Josh Kincaid. This is the Talking Hedge. Don't forget to like, share, and subscribe, or don't, and I'm out. Don't forget to smash that like button on your way out and check out these other videos that we've got.
Hi, y'all. I'm Joe, host of Casually Baked, the podcast. If you're curious to explore the highly responsible side of cannabis, farming, and legalization, I'm here to help lighten the stigma and build your canna confidence. Download episodes now of Casually Baked, the podcast, wherever you listen to podcasts. And journey with me through the evolving cannabis culture and discover how and why people like you are adding cannabis to their wellness toolkit. It's time to get casually baked.